What's up everybody, Steve here. I hope you're doing well. Homeowners equity is dwindling at record pace. Look, I did a video back about 4 months ago. I want to show you over here, and I put down 11 trillion in housing equity dwindling, sell now. And basically what I was looking to do is just prepare people for what I foresee what is going to happen with the real estate market in terms of perceived equity. And in that video, I stated that it really is not equity in my opinion because we are exasperating a bubble, a real estate bubble. And in that video, I also said that the equity is not realized. It's not a realized gain unless you actually did maybe say a cash out refi, maybe did a HELOC, pull money out, which I don't recommend. Or in fact, if you sold the house and sold your property. And that's what I spoke about multiple times in terms of our own real estate assets and what we did in terms of selling them off pretty much at the peak or before the peak happened. So over here, if you look, we click on this video real quick, I can show you what I said back about 4 months ago. I said, is the equity in your home fake if you do not sell it or do a cash out refi? Well, I believe the equity will be dwindling away over the next 24 months as buyer demand for housing slows, mortgage interest rates continue to rise, as well as a looming recession upon us. And it looks like we're pretty much headed into that direction. Now, this was based on a CNBC article. And if you click that article, it's going to bring us to here. And basically, this is back June 6th of 2022. The collective amount of money mortgage holders could pull out of their homes while retaining 20% equity rose by an unprecedented 1.2 trillion in the first quarter of this year, according to Black Knight. In total, the nation's so-called tappable equity stood at 11 trillion, or 2 times the previous peak in 2006. That boils down to an average of about 207,000 in tappable equity per homeowner. And I saw these articles coming out one after the other of all this equity that homeowners have. And I believe it was just kind of a false sense of security of people's wealth or the growth of wealth. And we're at a position right now where mortgage rates are over 7%. I foresee they're going to continue to go higher. And that equity is just going to continue to decline. Now, if we jump over to Redfin, we can actually see Redfin weekly housing market data, median sales price in all Redfin metros. And if we look at the peak around April, May-ish, we are about 390,000 median sales price. And now we have decreased to about 364,000. We can see this trend is just obviously going down pretty aggressively, and this is over the last 12 weeks. So things are progressing quickly. And now this sparked my interest to do this video based on the new article coming out from CNBC, how much equity U.S. homeowners have lost since the month of May. And we scroll down. Since May, however, about 1.5 trillion of that has vanished. According to Black Knight, a mortgage software and analytics company, the average borrower has lost $30,000 in equity. As mentioned, you can jump over to that Redfin over here and you can see 390 compared to 364. So that's right in line with this article. Homeowner equity peaked at 17.6 trillion collectively last May after home prices jumped 45% since the start of the pandemic. So now you might be asking, what can I do? What should I do? So if you own a property, if you own a home that you're living in and you foresee that you might be running into some trouble, as a real estate broker, we would really concentrate on people who had to sell their homes. And these are people who needed to get out of their properties because of a job transfer, a job relocation, maybe a death in the family, maybe a divorce. And now I think another caveat, another motivated seller in today's market might be buyers, and buyers who have buyer's remorse. There's a lot of studies coming out right now that buyers jumped into the market. They got a house that was not necessarily in the location that they necessarily wanted. Maybe the house is too small. And also, in some cases, a lot of these home buyers didn't do inspections. They got into situations where they just cannot handle the amount of repairs financially, maybe even emotionally as well, that are needed to get this property or these properties up to par. So I know you can't necessarily predict what's going to go on in terms of what's going on with job, family, whatever the case is. But if you have any situation where it might be a little shaky, you may want to consider selling your property now while you still might have equity in your property, depending on when you purchased. And also, if you guys are a buyer and you're sitting on the sidelines, I mean, if you just look at the data and the trends that are going right now, I don't think real estate's going to necessarily flatten out as mortgage rates continue to increase. I think that we're going to just see property values continually decrease and more of that equity just vanish. And I got another video coming out as well in terms of potentially seeing double-digit mortgage interest rates for the foreseeable future. And I'm not just talking maybe 1 or 2 years, could be 8, 10, 12 years to come, based on looking what happened in history. So be sure to check out that next video when it comes out, and I appreciate you guys being here with me today. Thanks a lot.